Welcome to Inside India. I'm JP Ong, and here are your headlines. Indian Prime Minister Narendra Modi hailing growing ties with Russia as he met with President Vladimir Putin at the SCO summit in defiance of U.S. pressure. President Trump and top U.S. officials slamming India's cozying up to Russia and China with Elaine Yu on the ground in Tianjin.
Trump has called trade relations with India a, quote, one-sided disaster as Treasury Secretary Scott Bessent accuses India and China of being bad actors in Ukraine for fueling the Russia war machine.
Meanwhile, Prime Minister Narendra Modi is also back in New Delhi, where he will be inaugurating Semicon India. It's part of the country's ambitions to build a chip supply chain. Good morning and welcome to the program. We start off again with a look at the Asian markets that are trading this Tuesday morning, and a bit of a mixed bag from Tokyo to Taipei in today's session. We are seeing that the Nikkei 225 in Japan and South Korea's Kospi showing shades of green, but a bit of a step back for other major markets. The KLCI in Malaysia returning from a longer weekend and facing intraday losses. Meanwhile, we're seeing just a little bit of hesitancy for mainland and Chinese markets, and that of the Hang Seng, which is currently about 0.3% in the red. The Indian market's also set to come online in just about 40 minutes, but let's see what the gift Nifty futures are prophesizing for the Tuesday open. And we're seeing so far that it is looking a little bit better, actually, as compared to yesterday's close, trading just about 100 points higher from Monday, from where it stopped on Monday. The Nifty 50, of course, closing at 24,625, in part from that rosier than expected GDP print that lifted sentiment somewhat for traders out in Mumbai. But let's head out to Tianjin now, where it's diplomacy central. Elaine Yu joins us from the ground once again to give us the latest on the SCO summit and the comings and goings of many of the leaders who met with President Xi Jinping and also tried to hold caucuses on the ground. Elaine, what is the latest?
Good morning, JP. So the big event today is the bilateral meeting between President Xi and President Putin. And President Xi has also just had bilateral talks with Pakistan's Prime Minister. So that does point to the undercurrents geopolitically with India's leader also having a high-profile bilateral meeting here, just showcasing the geopolitical tensions under this optics of solidarity here. But President Xi is using the SCO summit as a platform to present this alternative world order and leadership focusing on multilateralism. And Xi gave a tone-setting speech over this summit, saying the shadows of a Cold War mentality, hegemony, and protectionism are lingering on, and that the world has entered a new phase of turbulence and transformation. And he called on countries to seize this moment to take SCO cooperation to the next level. So very much responding to the times here with the shifting geopolitical tides. And President Xi also proposed a global governance initiative where a principle is sovereign countries being equal, and also SCO member states have accepted a development bank, and China will be pledging loans to it as well. And they also danced around the U.S. a bit, although it didn't name the country. And we see Wang Yi, the foreign minister of China, giving a more pointed attack of the U.S. In his remarks last night. He said in the face of a resurgent unilateral bullying, the summit called for elimination of unilateral practices that violate WTO rules. So it is very much pointing to the U.S. without referencing it, JP.
Indeed, and perhaps that also came up when we saw the three leaders. We're talking about Chinese President Xi Jinping, Prime Minister Narendra Modi of India, and President Vladimir Putin of Russia huddling and chatting yesterday. And that's drawing some reactions from the United States, specifically from White House Trade Advisor Peter Navarro, who has called India the Maharaja of tariffs. And he also spoke about the new oil purchases from New Delhi. Here's what he said exactly, Elaine.
Putin gives India a discount on crude. They refine it, sell at premium prices to Europe, Asia, and Africa. It's nothing but profiteering. India cannot stand on the thin reed that somehow they need this oil to run their cars or cool their homes. It's false, just simply false. It was a shame to see Modi getting in bed as the leader of the biggest democracy in the world with the two biggest authoritarian dictators in the world, in Putin and Xi Jinping. That doesn't make any sense. I'm not sure what he's thinking, particularly since India has been in a Cold War and sometimes a hot war with China for decades.
Elaine, more than a mouthful there from Peter Navarro out in Washington, D.C., but it also highlights how oil has become a central and focal point of the India-Russia relation, which is also at play at the SCO summit. Can you tell us more about how oil exactly is playing into some of these relationships that we're seeing on the sidelines?
Of course, yeah, China and India being the top two buyers of Russian oil has attracted the attention of Trump, but also leading to punitive measures on India's purchase of Russian oil specifically. We're seeing that additional levy on India only and not on China at this point. But we still see India and Modi and Putin showing this closeness in their relationship. So analysts are saying that India won't likely reduce significantly its oil purchases from Russia because of this. Now, they did have a high-profile meeting yesterday. The focus of the summit is very much about the bilateral talks between India and China, but what's been dubbed the limo diplomacy between Putin and Modi has been quite a spectacle. The two leaders had bilateral talks after the summit yesterday, which Modi described as an excellent meeting, and he also shared a photo of the two sitting in the back seat of a car, and him also saying that conversations with Putin are always insightful. But let's take a listen to how Modi described the relationship with Russia and Putin.
Our special and privileged strategic energy partnership is representative of the depth and breadth of our relationship. In the most difficult situations, India and Russia have always joined hands with each other. Our close cooperation is not only for the people of both countries, but also for global peace, stability, and prosperity.
So Modi has described the relationship or the strategic partnership between India and Russia as special and privileged. And Trump is likely watching what's taking place, and also Trump's on Truth Social saying that calling the trade relations with India is one-sided, and he's also claiming that India has offered to cut U.S. tariffs to zero. So we haven't heard from the Indian side on that, but sounds like India will be in a hard balancing act with these deepening trade ties with Russia and China, but also navigating these talks with the U.S. JP.
And here I thought limos went out of style already. Guess I was wrong. Elaine, you from Tianjin, thank you, sir, for reporting on the silence of the SCO summit. We look forward to more updates from you on the ground as they come through. Meantime, Indian Oil Minister Hardeep Singh Puri also continues to deny those allegations made by the U.S., writing in the Hindu newspaper, with him saying that India is not profiteering from its Russian oil purchases. He argues that its purchases have stabilized markets and kept oil prices from soaring to $200 a barrel. Puri insisted every transaction is legal and audited, adding India has not broken rules but helped keep global prices in check. To talk more about oil and the impact of all these geopolitical comings and goings on the energy markets, we're joined by Mukesh Sadeh from Melbourne, Australia, who is the Senior VP and Head of Oil Trading at Rystad Energy. Mukesh, thank you so much for joining us today. As we know, oil is also very much beholden to a lot of these political tinges and developments in the world. But help us, give us an idea of what you make of all the developments, especially with regards to India's relationship with China and their growing oil purchases and how that's showing itself in the global oil markets right now.
Good day, JP. I think we are dealing with a very complex oil problem at the moment. I was watching the previous segment where the minister was talking about, first of all, that India has not broken any rules. I think there was a time when US ambassador or US officials actively encouraged that India should buy the oil under the price cap mechanism. And I think there were fears if India didn't buy the oil at that point of a time, that the oil prices would go very high. Probably we are not in those times when OPEC Plus is bringing a lot of barrels and promising a lot of barrels back to the market. I think what is at stake is that it is not just about the volume of oil, which often gets talked about, what India is buying, what China is buying. There is a lot to do with the quality of the oil. And the Russian barrels and the Middle Eastern barrels, which India used to buy before this whole thing erupted, are of very similar or in the same quality range. And that's what the Indian refineries need. So there is quite a bit of a quality game. And that's why India probably just cannot switch off the Russian barrels unless it gets the right replacements. And in the past, the right replacements were the barrels were coming from Iran. India is not buying the sanctioned barrels. The right barrels were also coming from Venezuela. The right barrels were also coming from other parts of the world. And the Middle East itself has become a big refinery hub, which is consuming a lot more of their own oil. So they also can't give more. So I think I would say that in this complex problem, I think at this point of time, to meet the needs of the Indian refining system, buying Russian oil is just part of the whole equation of getting the oil at the right price, and the alternatives are not strong, and alternatives do not exist so easily.
Yeah, Mukesh, just as a side note here, we're also getting pictures and updates with regards to a trilateral right now that's ongoing between China, Russia, and Mongolia. You're seeing here photos of Russian President Vladimir Putin and Xi Jinping of China actually meeting with their counterpart in Mongolia. Again, or just highlighting how international and how global South focused, for lack of a better term, this particular summit is. And of course, with India having such a very big role in this particular equation. Help us understand how complicated it's going to be for India if it wants to wean itself off of or find alternative sources of oil at the moment. Because as you mentioned a while ago, Russian oil is integral, that is, to the operations because of how some of the refineries are set up. Where else can they go, and how difficult or near impossible would it be for India if they wanted to rejig this without causing huge energy problems within their home country?
Excellent question. I think this is the question, JP, on most people's mind. What's the alternative? And we have heard that US wants to send more WTI barrels as part of the trade deal. And what I would call the WTIization of the Indian refining system is not going to be an easy thing technically. So India has to find equal quality of the oil, and Middle Eastern barrels is where the India would find. Now, before the whole Ukraine crisis happened, I think this has been talked quite often, that India used to buy from 27 countries. Now India is possibly buying from about 40 countries. So I think India has certainly diversified their position. So India is now reaching out to Brazil. India has been reaching out to, I guess, some of the African nations, Nigeria, to get some more oil. So it won't be one big place where India can easily just replace the Russian barrels. There would be some reduction, possibly, sure, but some of the Nigerian barrels, some of the Brazilian barrels, and some of the barrels which OPEC Plus is bringing back from Iraq, I think those are the places where India can land the barrels. The market, from Indian perspective, I think they have done a good job in diversifying the crude basket. So yes, they have the means and they have the method. It's always a question of the right price. And with US putting more sanctions on Russia and other places, and the barrels getting more discounted, we have understood that there is a new price cap of 47 something also coming on the Russian barrels. So ultimately, it's an economics question, and buying Russian barrels probably helps India to negotiate better with the other producers in the world. So I think that advantage, India would also not easily go. Yes, some reductions would be there, but then that brings the China, and probably I'll reserve my comment on China, what it is doing a little later.
Mukesh, I want to take a step back and focus on something that I think is important that you brought up, and not just for India, but for other countries, because one of the things that's been brought up is that if countries want to rebalance these trade surpluses they have with the United States, one of the easiest ways is to just buy U.S. energy, either it be LNG or oil. But as you've mentioned, the way your refineries are set up, it doesn't make it as easy to switch to U.S. oil as it seems. Is this a fair assessment, and is this something that countries that are looking to rebalance their trade standings with the U.S. through oil purchases need to consider?
No, I think excellent point and often doesn't get talked. I would say the chemistry of the oil is in collision with the geopolitics of the oil, right? And ultimately, the chemistry will have to win, and the trade deals have to be worked around. India is not just buying the medium sour quality barrels which it needs from for its refining system. There are also light barrels also coming from the Russian system which India is buying. So just buying a lot more of the WTI like barrels, which are even getting lighter and lighter over the years, I would say, and that is not an easy fit to the crude diet which India is being. India may have to do possibly a lot more blending, and they may need some heavier barrels to blend with the lighter barrels. So you just can't bring those barrels without getting those heavier barrels. And that's where I would say that China's role is also very important, because I would say China is becoming the vacuum cleaner of the oil markets. China has been storing huge amounts of oil in 2024 and 2025. And that is probably the main reason the oil prices, which a lot of people thought about will go to 40s, will go to the 50s, are still hanging around near the 68 or 65 range. So I guess the answer to this complex puzzle is how China adapts its oil purchase, how India gets to buy some heavier barrels and some other barrels to possibly blend with the lighter barrels from WTI. That's how things can resolve, and these things will take time, and that's why we are seeing some hardening of the stance, that because it's just not an easy problem. Imagine the world that US was producing the Russia quality of barrels, and Russia was producing the WTI like quality of the barrels like the US. India would definitely buy more from the US and will not buy from Russia. So I think that's where it makes the chemistry of oil versus the geopolitics and chemistry would, I believe, ultimately win, but it takes a while for everybody to understand.
Mukesh, Indian Minister Hardeep Singh Puri talked about denied allegations that they are actually profiteering from Russian oil. But something more interesting he actually mentioned about 3 years ago when CNBC first spoke to him at the start of the Russia-Ukraine crisis. He said that the priority or the focus of India has to be to the interest of the Indian consumer and not that of geopolitical considerations, meaning that they have to make sure that Indian consumers are protected from price shocks at the moment. Again, give us your thoughts on what that means and whether or not it'll be easier for India to find other sources of oil that will protect the Indian consumer as well, the way these Russian discounts have in the past.
Excellent point that indeed, I think this goes beyond, I would say, Indian consumers as well. I will a little bit expand. Yes, it's an important issue of national energy security, and India is a huge country which is consuming, and the demand growth is happening in India. What we also need to understand is that China, as the bigger refiner in the region, is slowing down, and China is not refining as much as crude oil it used to do. It's flatlining. We have also learned that over the past many years, outside India, outside China, the entire Asia Pacific has lost a huge refining cover. We have probably lost 1.5 million barrels per day of refining. So it's not just that, I would say, an Indian problem. It's maybe more Indo-Pacific or an APEC problem, that there is demand growing. And if India probably doesn't get the Russian oil or doesn't get the right quality of the oil and has to somehow cut down its refining, it will not only affect the Indian population and the prices, but it will affect where I'm in Australia, because Australia's purchase of the refined products has doubled over the years. So there is almost an Asia-Pacific exposure to the products and the prices, and not just about India. And India can possibly still work it out and sweat it out for some time, but some resolution has to be found out. And the Middle East players, the OPEC Plus, is where the resolution will come from.
And that also goes into what some people might characterize as divergent views on the global economy and oil appetites, because while many do believe that the global economy might be slowing down, you have OPEC Plus still issuing rather rosy pronouncements and supporting some of the supply production increases that they've issued. I mean, what do you think? How do you make sense of this seeming divergence of views at the moment, and how is that influencing Rystad's outlook on crude futures in the coming months?
Well, we look at rice energy into a lot of granular data, and what I would say is that OPEC Plus is probably doing, in my view, a fantastic job in how they have calibrated and managed the market. And what do I mean by that? I think they're bringing the targets up for crude. They may not necessarily mean that oil exports will rise from the Middle East. A big part of the oil production increase will likely go into the refining system in the Middle East, and they are producing the products which Europe needs. We have seen that there was a huge diesel shortage in the Middle East, in the Europe, which Middle East refiners can fulfill. So OPEC Plus is bringing barrels back to feed their own refining system. OPEC Plus will also give some extra barrels to the countries they need. So they will keep the prices, I would say, not crashing to the 40s and 50s. And one very important metric for the OPEC is to keep the market in what we call the backwardated structure, which means the futures curve prices are lower than the present prices. So which means that OPEC Plus does not want to give incentive to rest of the world to store too much oil, and that has a bearish impact on the prices. So I would say that the crude futures backwardation likely continue to roll. The fear for OPEC Plus is contango, and a lot of trading communities meeting probably next week in Singapore to debate these kind of questions every year at the APEC. And for now, I would say our view remains that the oil prices will not go to 40s and 50s. Our call is about 65 for the fourth quarter. Backwardation continues to roll, and OPEC Plus has probably mastered the art of how keeping the current in the prompt market short of crude oil, and as they give signals to bring more. So I think that kind of approach will continue to do. And China being the vacuum cleaner or let's say sucking up a lot of oil, even if they don't need into storage, is sort of helping that strategy.
Mukesh Sadeh from Right Side Energy, thank you so much for joining us today on Inside Data to help us get a better sense of how the oil markets are responding, not just to the geopolitical currents that are happening at the SCO summit, but also the global trends that have been playing out for most of 2025. Appreciate your thoughts and your insights, sir.
Thank you.
Meantime, amid the rough relationship between India and the United States, billionaire Mukesh Ambani's family has postponed a high-profile cultural showcase in New York, citing unforeseen circumstances. The Nita Mukesh Ambani Cultural Center had planned an India weekend at Lincoln Center featuring many noted Indians and a grand musical. The center says this is a postponement, not a cancellation, and the show will be brought to New York at a later date. We will bring you more news and updates on the other side of this break. Stay tuned. Welcome back. You are watching Inside India, and some of the stories we're keeping tabs on. Search and rescue operations are underway in Afghanistan after a magnitude 6 earthquake killed more than 800 people and injured at least 2,800. It was one of the country's worst earthquakes. The mountainous Kunar province saw the worst of the damage, with most of the village destroyed. The UAE has sent teams to help in the search and rescue efforts. Several countries, including China, India, the UK, and Switzerland, have pledged donations of aid. Officials have warned that the death toll may rise significantly. India is suffering the brunt of natural disasters as well. Heavy rains in the north have caused flooding and landslides that have resulted in a steadily rising death toll. The cities seeing traffic snarls due to waterlogging, and some states have also closed all tertiary institutions in the aftermath. The Indian Meteorological Department warns of further heavy rains over the coming days. And hundreds of students protested in Indonesia on Monday, defying security after weekend riots left 8 dead. Over the weekend, rioters looted homes and set state buildings on fire over lawmakers' perks. President Prabowo Subianto cut perks but warned of firm action. Students are demanding police reforms, with some protests postponed to avoid clashes. Currently checking on Indonesian markets, and we're seeing just a little bit of a rebound for the Jakarta Composite after Monday's intraday decline. As we wait for those boards to actually flash, we are seeing that the Jakarta benchmark is up by about 1.25%. The Indonesian rupiah, though, looking a bit firmer, also a day after the Bank of Indonesia pledged that they will defend the currency, or the Indonesian rupiah, from ongoing fluctuations and possible speculation in the markets amidst the political uncertainty unleashed by the riots and the ongoing concerns, at least, between the Indonesian population and some of their leadership. Now, coming up, we will talk about some major events in India this week, including Semicon and the Motilal Oswal Annual Conference. Stay tuned. We are counting down to the market open in India, and this is how we are shaping up ahead of the opening bell. See Nifty futures now trading just about 125 points above the Monday close, hinting again at steady and cautious gains for traders in Mumbai. We are seeing the Indian rupee, though, returning to losing ways after showing just a little bit of strength at the end of Monday's session. They are now softening against the U.S. dollar at about 88.14 against the greenback. The second edition of Semicon India kicks off today, with Prime Minister Narendra Modi soon to inaugurate the three-day event. This showcases the country's progress in the chip sector. India has cleared 10 semiconductor plants so far, with the first made-in-India chip expected by the end of the year. New Delhi has already committed 650 billion rupees under its 750 billion rupee incentive program to boost domestic production. Deutsche Bank is also reportedly looking to exit its India retail banking business. Sources tell Reuters the German lender has invited bids from both domestic and foreign banks, with a deadline of August 29 for the offers. The business includes 17 branches and generates about $278 million in revenue just last year. The move also comes as CEO Christian Sewing pushes to streamline operations, cut jobs and branches globally. Foreign banks have long struggled to scale in India, facing tough competition from local players and regulatory hurdles. There's been no comment, though, from Deutsche Bank. Let's also talk about how the IPO market in India is looking this week. 8 new issues are open for subscriptions, including Amanta Healthcare on the NSE main board. In the first half of 2025, 108 companies raised over $4.5 billion. But a report by EY indicates investors are still being cautious amid global geopolitical uncertainties. Some big names like Reliance Jio and LG Electronics have postponed their own plans to list certain units. Amit Ramchandani, though, is the CEO and Managing Director of Investment Banking at Motilal Oswal Financial Services, joining us from the 21st Motilal Oswal Annual Global Investor Conference. Thank you so much for joining us today, sir. Amit, we did note that IPOs, they haven't come to a standstill in India. The pipelines are still quite robust, but you might argue that's a little bit slower than we've seen in previous years, perhaps shifting from third to second gear. Do you think that the appetite for IPOs towards the end of the year will actually pick up significantly?
We are seeing the IPO pipeline only get bigger and bigger. We have seen about 78 IPOs last year. We've already done about 40 this year, and we expect this to touch 100. So I think the quantum of IPOs as well as the number of IPOs is only increasing. The average size of the IPO has doubled since last year. We expect the trend to continue. Even in secondary raisings, we have seen that continuously listed companies are raising more and more money. From 50 odd QIPs that happened last year, we did about 85 QIPs in the last financial year. And we expect this trend to continue as well.
I want to ask about what's been perhaps dragging on appetite for capital raising on the markets in the past. And when I think about what might have been the reason, there are a couple of suspects. One of them, of course, is the uncertainty with regards to the tariffs that were unleashed by the Trump administration. Is this one of the reasons why perhaps IPO or capital raising has been a bit more cautious in India? And do you think that's going to lift now that we're getting a bit more used to it, or perhaps getting a bit more definition on as to what the tariffs will mean for India's economy and markets?
So I would say that the tariff phenomena is more of a recent phenomena, right? While it has impacted fundraising in the last maybe 3 weeks, but things have generally been very, very buoyant till July end or so. We've raised 40 IPOs, which was probably half the number in just 5 months, right? So continue to see the activity to be extremely good. I think it's clearly need for primary investments, which is increasing the the number of IPOs. So whether it is infrastructure, whether it is EMS industry, whether it is semiconductors, energy, where India plans to go from 188 gigawatts to 500 gigawatts, lots of investments being made.
Amit, are there any particular companies from certain sectors that have approached Motilal Oswal with regards to interest in capital raising? Basically, are there sectors that are showing more appetite to get into the capital markets than others?
No, so clearly, as I said, energy transition is ensuring a lot of companies from that sector approach. So you have today target of 500 gigawatts on renewables. So anything that is related to renewables or power infrastructure is good. Attractive investment for investors. Consequently, we have been seeing a lot of companies come and raise money in this sector, right? We are seeing a lot of companies come and raise QIPs in the EMS sector. Electronic exports from India touched a high of 38 billion last year. We expect that trend to continue. Right. Similarly,
of course,
defense
has
been a big, capital raising area. So
right.
Indian government's emphasis on defense has ensured that more and more companies raise money there.
All right, so energy and defense sectors seem to be areas of interest. But of course, Amit, when we talk about the capital raising climate in India, we have to talk about that big announcement with regards to Geo platforms looking to raise money in what might be one of the biggest, if not the biggest, IPOs that India's seen in recent times. Can you talk to us about how the potential of this particular public raising, what its potential is to perhaps transform Indian capital markets and perhaps even usher in India's push in towards new technology spaces such as AI?
So I think this is one of the most awaited offerings, and this would probably be the largest offering that we would see from India. Not only, so whatever we have seen so far has been in the traditional sectors, right? Whether it was LIC, whether it was Hyundai, whether it is LG, all these came from, old age sectors. This is probably the first IPO which is going to mark India's entry into the digital and the AI space. We saw how Geo transformed the entire landscape in India by ensuring that internet is available and reachable to all the smaller towns to the villages. That has fueled the digital growth in India, and we see this as the next step.
Amit, I'm curious also because they're making perhaps India's most significant push into the artificial intelligence space, and when you look at India itself, all the ingredients are there to make a strong push into AI, such as a healthy tech talent pipeline, a lot of resources, a lot of capital you can devote towards data centers and AI development, actually. But you might say that India has been a bit belated or a bit more hesitant to go into AI as, say, a China or a US. Why do you think that is? And do you think that this IPO could change things for India and its appetite for these new technologies like AI?
Absolutely. This is going to be a game changer. While there has been some bit of delay, but we are now seeing very fast scale up, right? Data centers, for example, we expect in next 5 years, data centers should be at least 10x of what they are today. We are seeing a lot of companies that are now scaling up. While we had a lot of startups, the scale up has been slightly delayed. But in the next 2 years, we are expecting at least 25 big offerings in the digital and the AI segment to come in terms of IPOs.
Amit, do you think that other companies, either large conglomerates or startups, perhaps might follow Geo's lead in going to the public markets with their own technology offerings, with their own initiatives to push into AI?
Absolutely, absolutely.
Right, Amit. Let's talk about the appetite and market conditions right now in India, because while we are seeing that the Nifty itself is holding on to about 4% growth, an uptick year to date, we've seen that foreign fund outflows have continued to persist, at least in India. That has been offset, to be fair, by retail investors and domestic retail investors in India. But do you think that the anemic appetite from foreign investors might cause headwinds for anybody trying to list in the public markets in India and perhaps pursue capital raisings as you've said, might pick up towards the end of the year?
Sure. So we haven't seen it hamper any fundraising so far. right? We have seen about 62 billion come in from markets last year, versus that the DIs have already pumped in about 59 billion in the first 5 months. So the appetite from domestic investors has only increased. The number of demat accounts that we had from retail, right, has grown 3x in the last has grown 10x in the last 3 years, right? So clearly seeing huge appetite and retail inflows, while FIIs continue to withdraw money from India. It's more because of lack of the growth that they expect. So we have always seen emerging markets allocate more and more money to India for the simple reason that we were growing very fast. Today that growth has slowed down. The corporate results have not, corporate earnings have not been that good. That is why you see FIS stepping back a bit. But if we expect this to change. A lot of measures that have been taken by the Indian government, whether in terms of reducing the interest rates or allowing NBFCs to lend more, or in terms of GST rationalizations, we expect all these measures to take effect in the third quarter and the fourth quarter of this year. You will clearly see that growth come back, and hence the FII flows back to India.
And Amit, just very quickly here, what is the one risk or that you're hearing from clients and potential listers actually that might make them reconsider, perhaps pause on any listings in the future, despite the fact that, well, again, we are expecting this to pick up? Is there any one particular market risk that they're looking out for that might make them decide to pump the brakes?
So clearly, I think growth and valuations have to be balanced. In the past, we have seen that valuations have sort of become more expensive than other markets. So if growth continues to fall, then you will see valuations becoming more expensive and fundraising coming down. If you just take a simple example, last year we had about 85 QIPs, which are listed companies raising money. This year that number is less than 20, to be precise, exactly 16, right? Which means the valuations of listed companies have become a bit more expensive for investors, and hence the fundraising has gone down.
Amit Ramchandani from Motilal Oswal Financial Services. Appreciate your insights and for joining us to give us a closer look at the ongoing trends with regards to the IPO and capital raising pipelines out in India. Appreciate your time, sir, and have a good conference ahead. And we're counting down to the market open in Mumbai, and we'll be back in just about 2 minutes, but don't go away. You are watching Inside India. Open in India, and we're looking at the Nifty 50 now trading at 24,665. That's about a tenth of a percent in the green. So it seems that the cautious gains for the Indian equity markets continues this Tuesday. The Indian rupee, though, back to losing ways and again weakening to about 88.08 against the U.S. dollar. Again, continuing its trend as it continues to test new record week levels against the U.S. dollar. We also take a look at car makers in India and the auto sector. Just a quick check of how some of these stocks are doing it, and mixed to the upside for the most part. Just looking for any outsized gainers. Hindustan Motors up by about 1.7% so far in today's session. You have a handful of laggards right now, such as Mahindra & Mahindra down by about a tenth of a percent. Indian car makers did report lower sales to dealers for a fourth straight month in August, with dispatches down nearly 9% amid weak demand and expectations of tax cuts. Maruti, Mahindra, Hyundai, and Tata Motors will together control about 80% of the market, all seeing sales declines. Mahindra losing its number 2 spot to Hyundai after SUV sales fell for the first time since 2022. Two-wheelers, those who make two-wheelers, that is, fared better, with Royal Enfield sales surging 57% higher and TVS also up by about 28%. Tax cut hopes, though, fuel the optimism in some of these stocks right now. And you can see again that there is cautious gains and also signs, at least, of Bajaj Auto just trying to find its footing today at about 8,970 per share. Keeping it with auto stocks, Ashok Leyland, India's third largest commercial vehicle maker, will invest about $570 million in domestic EV battery production over the next 7 to 10 years. The company plans to supply batteries to its EV arm Switch, as well as other automakers and for energy storage. It will partner with India's CALB, one of the world's top battery makers. With this, Ashok Leyland joins the likes of Tata Motors and Ola Electric in pushing to localize battery production and cut costs for electric vehicles. A quick check also on gold, hitting new record highs once again. You can see here the precious metal just trending a bit higher, gaining just a little bit of ground and inching up to $3,478 per troy ounce. And again, also perhaps a sign that there is still room and appetite for some risk hedging and safe haven positioning, at least for portfolios, not just in India, but for markets across the world. And something to watch out for, given the fact that India also happens to be one of the 2 largest buyers of gold in the entire world. Nikhil Ranka is the CIO of Equity Alternatives at Nuvama Asset Management, here to give us a better grasp, at least, of what are the trends and what are the appetites among Indian investors on the ground. Nikhil, thank you so much for joining us today. And I do want to talk about the appetites right now, especially coming off of that impressive GDP beat that we saw the other day. Do you think that this is one of the reasons why appetites have improved over the last few days? And if so, do you think that does this particular upside for Indian equities in terms of appetite has legs?
So good morning, JP, and pleasure to be on CNBC Asia. So if you look at the real GDP growth, we had a very decent number this time around. But historically, if you look at it, the earnings growth has tracked more closely nominal GDP. If you look at the inflation print in terms of inflation, we are down closer to 1.5–2%. And therefore, on a nominal basis, last 3–4 years, we were growing between 11 to 12%. But in all likelihoods, this year will be a single-digit nominal GDP growth year for the country. And therefore, if you look at the earnings expectations, also FY25, we ended with close to 5% EPS growth for Nifty. And consensus estimates also are at close to 10% for this year. Our expectations is there could be 1–1.5% cut to that. And we could probably grow between 8 to 9%. And therefore, for investors, it's very essential that they moderate their return expectations from Indian markets from these levels. If nominal GDP is going to grow in single digit, it's only fair to expect that the index returns also will be in single digit for Indian markets. However, having said that, if you look at the last 12 months, the index hit a peak of 26,200 in September 2024. And we have been down close to 4% on a trailing 12-month basis. So to that extent, valuations have become 10–12% more cheaper. And therefore, we feel that incremental downsides from these levels is pretty low. Closer to 24,500 is where we think market should bottom out. And we should stay in this range of 24,500 to 25,500 over the next 6 months.
And I asked that question also, Nikhil, because when you look at the performance for the Nifty, you might say it's a bit more constrained as compared to previous years, up about 4% year to date. But since the start of the second half, again, down by about 3.5% from last check. The only thing that really comes to mind really is the ongoing tariff issues and uncertainties, especially with what seems to be souring trade relations between India and the United States. Do you think that's been one of the reasons why sentiment seems to have been subdued since the start of the second half? And will that pick up anytime soon?
So JP, clearly tariff uncertainty has one have been the key overhangs for Indian markets. However, if you actually dissect on what sectors tariff have been put and what is their contribution to the index, so if you look at it in Nifty's composition, you have banking and IT and pharma put together, which will be close to 65% of Nifty's constitution. All the three sectors have been exempt from tariffs. So there's no tariff on IT sector, it being services. They have exempt sort of pharma, and banking anyways is a domestic sector. So for headline indices, tariff doesn't affect so much. But if you go to ancillary sectors like textiles, gems and jewelries, then obviously these are the sectors where there is a large impact of tariffs. And the second derivative of that is how does asset quality for the banking sector fare out, 6 to 9 months down the line if this issue prolongs. So that is what in my sense is keeping banking sector a bit subdued. The second fact is that NIMs have been under pressure. We had 75 basis points of repo rate cut in India in the last 2 quarters. And 50% of the book is linked to repo for most of the large private banks. So what has happened is you have to pass on the transmission on loan rates immediately. However, deposits take some time to get repriced. And therefore, we have seen 10-15 bips of NIM impacting Q1 on most banks. We expect another 10 to 12 basis points to come in Q2 of this year. And from Q3 onwards, we expect NIMs to stabilize and growth to start picking up for most of the private sector banks in that sense. So currently, we feel that IT could lead the up move for Nifty. And then as we move into the third quarter, banking should start picking up.
What about autos? Since we did talk about the declining car sales at the moment, what is your view on this particular sector, and do they have room in your portfolios right now, Nikhil?
So clearly the market's optimism on autos is a combination of two things. We had a fiscal bazooka. The income tax rates up to 12 lakhs have been exempt from taxation. So that gives more disposable income in the hands of a lower middle class in that sense. The second thing is we have GST Council meeting coming up on the 3rd and 4th of September. Where it is widely expected that GST rates could get cut from 28% to 18%. And that should drive some sort of volume growth in the auto sector. However, having said that, what we have to also keep in mind is that over the last 15 days, auto stocks have moved up by close to 10%. And a lot of positives are now getting priced in. So whether the sort of GST cut on autos becomes a sell on news event is something that we will have to closely monitor. Because ultimately, if you look at it, autos have been in that single digit volume growth for the last 2-3 years in Indian markets, both 4-wheelers as well as 2-wheelers. And therefore, after the initial pre-buying that might happen in Q3 because of the festive season as well as the GST rate cut, whether the momentum continues into Q4 and Q1 of next year is what the street will closely look out. If we see the trend continuing, then obviously valuations can sustain. Otherwise, my sense is the rally can fizzle out in auto stocks post GST rate cut announcement.
What about the rupee's weakness at the moment, Nikhil? Because while there are a lot of rosy prognoses on India's economy, the rupee, as we mentioned, trading and testing record weakness. Is this a factor in any way, shape, or form with regards to the equity market's performance, whether for better or worse?
So, JP, if you look at the last 15 days, the Indian 10-year benchmark bond yield was close to 6.2%. Post the GST rationalization announcement, we have actually seen yields move up by close to 40 basis points. Now, this has been a combination of two factors. One, if you look at the personal income tax collection, They are negative for the first sort of 6-7 months of this financial year. And the government is talking about additional 7 to 8 billion of revenue lost from GST rationalization. So the fact is people are therefore looking at a widening of fiscal deficit because of these two measures. And the yields have increased by 40 basis points. Now, if you look at the interest rate parity earlier, if the US 10-year was at 4.3%, we were at 6.2%. The differential was close to 200 basis points. That has widened by 50 basis points more. And therefore, if you follow the principle of interest rate parity, it's only logical that, rupee will depreciate a bit. And anyways, if you look at historical trends, because the gap between US and India is close to 200 to 20 basis points, or 2 to 3% rupee depreciation is par for the course. So in our models also, we will keep building that rupee will keep depreciating by 2 to 3% every year. That's normal, I would say.
All right, interesting insights, and we'll see if these do play out as we see the rest of the year unfold. Nikhil Ranka from Nuvama Asset Management, appreciate the insights and help us get a better grasp of how the markets are trending right now in India. It seems that's all the time we have today on Inside India, but do keep watching CNBC. Access Middle East is coming up next. Have a good morning.